Robert Kiyosaki is a well-known author and entrepreneur who has gained popularity for his insights on personal finance and investment strategies. In his work, Kiyosaki emphasizes the importance of building wealth through asset accumulation, by investing in various asset classes. According to Kiyosaki, there are 5 primary asset classes that investors should consider when building their investment portfolio. These asset classes include real estate. Real estate refers to the purchase and ownership of physical property, including land, buildings, and apartments. Historically, real estate has been one of the most popular and successful investments, with high potential returns and steady cash flow opportunities. Real estate can also be an effective hedge against inflation, as property values tend to rise over time. However, real estate investments require a significant upfront investment, which can make it difficult for beginners to get started. Advantages of real estate include, provide stable cash flow opportunities, potential for significant capital appreciation, and can provide a hedge against inflation. Disadvantages of real estate include high upfront investment required. Properties may require maintenance, repairs, and renovations, and real estate market fluctuations can lead to significant losses. There are several ways to invest in real estate, including purchasing a rental property, investing in a real estate investment trust REIT, participating in a real estate crowdfunding campaign, and flipping houses. Real-world example: investing in rental properties is a common way to build wealth through real estate. For example, a person may purchase a multi-family home and rent out each unit to generate steady cash flow. Over time, the property value may appreciate, providing a potential capital gain when the property is sold. Stocks refer to fractional ownership in publicly traded companies. Buying stocks provides investors with a piece of ownership in a particular company, and allows them to share in profits through dividends and potential capital appreciation. Stocks are a widely accessible investment, with many brokerage platforms available for beginners to invest in individual stocks, mutual funds, or exchange-traded funds (ETFs). However, stocks also come with risks, including market volatility and the potential for losses. Advantages of stocks include potential for high returns, accessible to a broad range of investors, and diversity opportunities across industries and sectors. Disadvantages of stocks include market fluctuations can lead to significant losses, companies may go bankrupt, leading to the loss of the investor's capital, and it requires careful selection of individual companies, which can be challenging for beginners. There are several ways to invest in stocks, including buying individual stocks through online brokerage platforms, investing in mutual funds or exchange-traded funds (ETFs), and participating in dividend reinvestment plans. Investing in stocks can be done through purchasing individual shares of well-known companies such as Amazon, Apple, and Nike. For example, purchasing 1,000 worth of Apple shares in 2004 would be worth nearly 35,000 today with dividends reinvested. Bonds refer to fixed income securities that represent a loan made by an investor to a borrower, typically a corporation or government. In exchange for purchasing a bond, investors receive regular payments in the form of interest, with the principal amount being paid back at maturity. Bonds are considered a safer investment than stocks, with a lower risk of loss. However, bonds also typically offer lower returns than stocks, which can be a disadvantage for investors seeking higher returns. Advantages of bonds include safer investment with a lower risk of loss, and provide steady cash flow through regular interest payments. Disadvantages of bonds include typically offers lower returns than stocks. Bond prices can fluctuate with changes in interest rates and default risk, the risk that the borrower may default on the loan. There are several ways to invest in bonds, including purchasing individual bonds through brokerage platforms, investing in bond funds or ETFs, and investing in bond mutual funds. Investing in bonds can be done through the purchase of U.S. government bonds. For example, purchasing a 10,000 bond in 30-year U.S. government bonds in 1990 would have returned over $60,000 in interest and principal by 2021. Commodities are physical goods that are traded in global markets, including metals, energy, agriculture, and more. Investing in commodities can provide diversification opportunities and a hedge against inflation. However, commodities can be more volatile than other investments, with sharp price changes resulting from global economic shifts. Advantages of commodities include provides diversification opportunities, offers a hedge against inflation and potential for high returns during times of economic growth. Disadvantages of commodities include volatile and unpredictable pricing, requires specialized knowledge and expertise in individual commodity markets, and limited diversification opportunities as not all commodities are traded on the same exchange. There are several ways to invest in commodities, including purchasing physical commodities such as gold or silver, investing in commodity ETFs and trading futures contracts. Investing in gold is a popular way to invest in commodities. For example, investing $10,000 in gold in 2010 would be worth over $22,000 in 2021. Cryptocurrencies are digital assets that use cryptography for security and are decentralized, meaning they are not controlled by a central authority. Bitcoin is the most well-known cryptocurrency, with others including Ethereum, Litecoin, and more. While cryptocurrencies are considered a high-risk investment, they also offer high potential returns. Cryptocurrencies have seen significant growth in recent years, with large institutional investors beginning to invest in the asset class. Advantages of cryptocurrencies include offers high potential returns, decentralized nature can provide a hedge against inflation and market growth potential as the technology develops further. Disadvantages of cryptocurrencies include high volatility and instability, lack of regulation and security risks, and limited understanding and adoption in mainstream markets. There are several ways to invest in cryptocurrencies, including purchase coins through cryptocurrency exchanges, invest in cryptocurrency ETFs, and invest in stocks of companies that hold cryptocurrencies. Investing in Bitcoin in 2015 would have cost approximately $300 per coin. As of 2023, Bitcoin has reached over $28,000 per coin, representing a significant return on investment for early investors. In conclusion, Robert Kiyosaki's 5 asset classes provide a variety of investment opportunities for beginners seeking to build wealth through asset accumulation. While each asset class offers various benefits, it is essential to consider each investment's potential risks carefully. When building an investment portfolio, investors should consider diversification across asset classes to reduce risks and increase potential returns. Have you diversified across the 5 asset classes? Please comment below. Thank you for visiting Free Market Economy.